Los derivados han sido desde siempre terreno de los grandes jugadores institucionales. Su complejidad y riesgo han intimidado por mucho tiempo a inversionistas individuales, pero esto está cambiando, abriendo nuevos horizontes de oportunidad para todos en este mercado. Presentamos el Fireside Chat, The Evolution of Individual Investors in Derivatives Market. Troy Kane es el CEO de MIAX Futures y fue previamente Global Head of Derivatives en Citadel Securities. Su trayectoria como trader se remonta a sus inicios a los 14 años en el Chicago Board of Trade y posteriormente en el CME, donde fue Head of Strategy and OTC Products. Acompañando a Troy en esta conversación, Silvia Davi. Silvia es presidenta y cofundadora de VNS Strategic Consulting, firma especializada en asesoría de estrategia de marketing, desarrollo de negocios, comunicación corporativa y relación con inversionistas. We welcome Troy Kane and Silvia Davi to the Risk Management and Trading Conference 2024.
Thank you, RiskMathics. Thank you, Alan. It's great to be back in Mexico City and to have us back here today for this fabulous conversation. I'd like to formally introduce Troy Kane, who is CEO of MIAX Futures. And before we get formally started with our discussion, Troy, why don't you take us through your career? Last time we were here, you were at a different organization. You started at MIAX earlier this year. Take us through your evolution in the industry. You're known as a market structure expert. So tell our audience how you got started in the space.
Yeah, it's a fun story I like to tell. So I come from a multi-generational family of traders. I actually got my start on the trading floors in Chicago at the age of 14. So I started in the summers at the Chicago Board of Trade in grain and oilseed pits, clerking. So my first job was to collect the trading cards of the traders and tally up their positions and then give their positions every 15 minutes. So if you were wrong, you probably got fired that day, but luckily for me, I wasn't wrong. So I did that every summer when they needed extra help. So my family was in the business, so they pulled some strings, got me down there when I was 14, and worked every summer. And then after high school, I started working for the exchange directly. Fast forward a couple years, electronic trading started to really take over the industry and wanted to start working on trading system development and decided to leave the trading floors and start working on system development and design, and did that for 7 years. And the Chicago Board of Trade was acquired by CME and became CME Group. So I started working on operations and product development at CME and was at CME actually for 16 years. Before moving to Citadel Securities. So I spent 6 years at Citadel Securities, where I was the global head of derivatives and FIC development. So my job was to work with all the global exchanges that Citadel traded with to understand market structure, understand how the exchanges operated, how those financial markets operated, and how Citadel could trade in those markets. So I would work with each of those exchanges and advocate for how those exchanges could evolve and how Citadel could also evolve in those markets.
Well, you've had a fascinating career, an illustrious background in the derivatives industry, and you're the perfect person to discuss the topic we are here to discuss today, which is really the evolution of the derivatives industry overall. Can you take our audience through all aspects of the derivatives industry, perhaps touch some of the high points, and bring us to where the industry is today?
Yeah, I mean, you go back probably, well over 150 years, derivatives or futures and forwards were really kind of started to be risk management tools for hedging and price discovery with agriculture. I'm very proud that my family got started in trading in agriculture because that's really how futures and derivatives got started. Now, fast forward to the 1980s and 1990s, you started to see derivatives being introduced to other asset classes, financial derivatives, FX, interest rates, and then eventually equities. So, they continued to evolve, and then options started to get introduced on those asset classes, and they continue to grow volume, and you see more exchanges to be launched that we're innovating around derivatives to create them, not just as risk management instruments, but also as investment vehicles. And now, today, we see them as a fast-growing asset class, and options really being kind of the core of that. But also, if you look at interest rate swaps, and you look at more exotic derivative contracts that are being traded at banks, new derivatives are being created every year.
And describe the growth that you have seen, particularly in North America, and what you have found in the industry to be the biggest innovation from your perspective. Give us your thoughts.
A lot of it has been electronification, and equities really futures and equities went electronic a lot faster than other asset classes. Options were really the ones that stayed in the trading pits the longest, and actually we still have trading pits today for options. Fixed income still is traded a lot via voice or via bilateral, even though they're still evolving more electronic. But really we've seen a lot of electronification of the markets, and then we've also seen a lot of co-location of markets. So what that means is that large data centers are being built and matching engines are being put in these data centers, and trading firms want their servers to be co-located next to these exchanges. And what that's doing is it's allowing the data to be moved much quicker within those data centers so that trading firms can then optimize the way that they're trading on those exchanges.
So how do you see the evolution playing out here in Mexico and throughout the entire region?
So I think where I see the evolution kind of in Mexico and LATAM is we're starting to see that technology kind of revolution happening that has happened in North America, or in the United States, I should say, kind of coming down to Mexico and to LATAM. We're seeing a lot of the regional exchanges starting to upgrade their technology, putting investments in data center, allowing co-location, which really wasn't allowed up until recently. And so that's allowing more global market makers and global trading firms to then take that model that they have in the US or in other countries like the UK or Germany and apply that to Mexico and to LATAM, and then apply those strategies to these markets.
So the last time we were here together on this forum, we were talking about the explosive growth following the pandemic, particularly in the derivatives industry and with the retail investors. Could you touch on that and just give us an update? Have you continued to see those patterns in LATAM and the opportunities for the retail investors in derivatives?
Yeah, the pandemic was a great kind of experiment almost of individual investors having time. We're trading it, or we're at home or in quarantine. You also saw technology bringing access to the markets to individual investors, so they had access to be able to trade. You saw the spike in retail trading in the US and other countries around the globe. We've seen the spike in individual or retail trading in Brazil. We're starting to see it in other countries like Colombia and Chile. And now I think we're starting to see that in Mexico as well. So I think as brokers, which are really the key of kind of delivering that access to individual investors, are starting to see that kind of emerge. They're making those investments in the country to bring that access through apps, allowing barriers to entry to come down to access to with lower deposits to open an account. Trying to make it cheaper to trade. In the US, it's free to trade equities, or it's virtually free to trade equities. So I think brokers are trying to replicate those models in Mexico and in LATAM so that it's easier for retail to access those markets.
And there seems to be more access to content and a lot of financial literacy programs, particularly here in Mexico, like with RiskMathics. So I think all of that plays a role.
The internet. Everyone has a cell phone. There's a lot of access. Even if you look at like Reddit and TikTok, that's helping to get content out there. It's not just education. I think if anyone saw the panel yesterday, content is helping not just educate investors, but it's giving them fundamentals and giving them ideas of how to look at the markets and how to learn to trade and make decisions for themselves and not just replicate what everyone else is doing.
That's right, and it seemed to have empowered this new generation of traders to be able to access content, teach themselves how to trade, and has really affected the industry in many ways. What other factors play a role in the evolution of the derivatives industry? For instance, here this week, we've discussed geopolitical factors quite a bit, the impact that elections can have here in Mexico, in the United States. There's wars overseas, cyber attacks that could impact the industry. So from your experience, could you talk about the risk management aspects of the derivatives industry? And maybe for this audience, give them a sense on how that differs from the equities industry, for instance.
Yeah, so there's a lot of buy-side institutional asset managers here today. You know, derivatives were really designed to be risk management instruments. And when you see a lot of uncertainty in the market, I think there's a flight to quality to going to derivatives, even more so in options today than ever before, of using them as risk management tools and putting on positions when there's uncertainty in geopolitical situations so that they're managing their portfolios, not just for their customers, but just in general for all investors. And so now that we see this next generation of investors and portfolio managers coming into the marketplace, you know, I always give advice to young investors or portfolio managers, learn options, because options are absolutely the best risk management tool today to leverage if you want to manage that uncertainty in the marketplace.
And have you seen more recently in the past year, there's been more wars, there's been more overall crises that have empowered a lot of these investors to take action? I mean, what have you seen as far as the impact more recently with some of the climate that we're in?
I mean, I'll just highlight one specifically, right? We're going through a lot of elections globally. I mean, there was one just here in Mexico recently. There's one in the United States coming up in November. You know, elections can tilt administrations, you know, monetary policy, it can trade policy, a lot of, you know, things can be decided based on that. And so investors, they don't know which way it's going to go. So they want to kind of position their portfolios in a way that ensures that they're not going to either go down or they're not going to lose everything that they've saved up. We've seen a lot of financial collapses in our lifetime, probably more than we want to see. And so I think we want to learn from that, and we want to make sure that we don't see a bottom again.
There's definitely a lot of lessons learned in the industry, and a lot more access to technology, which is our next topic, which I'd love to get your take on. You've been in the industry for quite some time, have seen the impact of electronic trading. Could you just describe for the audience, what are you seeing as some of the biggest innovations from the technology standpoint when it relates to trading in general?
Yeah, I mean, I think that electronic trading was obviously the pioneer over the last 20 years, but now we're seeing a lot of cloud utilization, not just for crypto, but we're seeing it, you know, for post and pre-trade services. Clearing is now adopting cloud services. We see a lot of cloud computing. So, you know, there's a lot of machine learning that's being done in financial services today. A lot of banks are using cloud computing to, you know, be able to service their clients a lot more, a lot easier. A lot of banks are leveraging that. We see blockchain that's trying to find other applications that's not just crypto. I think we always say that blockchain is trying to find it's a solution trying to find a problem, right? And I think that there's a lot of effort to try to digitalize other assets, and I do see that there are applications. One of them right now that's been interesting is the mortgage industry. There's some beta going on right now with trying to see where mortgages can be, or where the mortgage industry or financing and mortgages can be done maybe on a blockchain. So I could see fixed income markets potentially going that way one day. There are some other markets globally that have talked about putting equities on the blockchain. There's probably a case for futures one day going on the blockchain. So I definitely think we're going to see a lot there in the future. We've talked about AI, so I don't know that I need to go into that too much. We had to lunch earlier on that. But, I mean, there's a lot of great technology. What I've been so fascinated with is the acceleration of how technology is changing our industry. 10 years ago, it would take, 2 to 5 years for a technology application to kind of be adoptable. Now it's like 1 to 2 years for a technology to be adoptable. I mean, when you saw how quickly AI was starting to be kind of, tested in the marketplace was only 2 years ago, right? Blockchain was 5 years ago. So you're starting to see things kind of accelerate and kind of be adoptable much quicker. And so I think you have to be very agile in the marketplace, and you have to be always on the forefront of what is the technology that's being utilized today, and be open-minded, and also be careful about how it's being utilized.
Absolutely. It's exciting to see the market transformation over the past 20 years. I think we both often talk about how we started our career in the very beginning of electronic trading, and between the efficiencies, the better prices for investors, even blockchain providing more transparency. There's so many real-world use cases, and every day, to your point, there seems to be a rapid pace to really leveraging the benefits both from the institutional side and the retail side. And since we're talking about technology, and you're now at MIAX, in the industry, the Miami International Exchange has been known as a pioneer in the world of technology. When they started 14 years ago, that was the vision, and it's fascinating to see where it has ended up today. These videos that we've been seeing really are a testament to how much it's grown. So take us through the vision originally. MIAX was a startup, right?
Yeah.
And now it's a very well-respected technology leader in general. So provide us with an update on the overall vision and the technology strategy MIAX has today.
Yeah, so the founders of MIAX, they wanted to start the company as a technology company that was going to be building exchanges, essentially. And when they set off to start building those exchanges, they wanted to improve the experience that customers got in trading options electronically. And what that meant was improving the risk controls that needed to be innovated, allowing market makers to have better protections so they can drive better liquidity into the marketplace. And then that would improve liquidity so that end users could come in and trade on our exchanges. And so that was the vision that they set out on, and then that launched the first exchange. We now have 4 exchanges. We launched our 4th exchange last week called MIAX Sapphire. We have every market model that exists in the US markets today, and we continue to innovate our technology in US options. We also launched a US equities exchange on that technology, MIAX Pearl Equities, and now we're in the process of building that a matching engine off of that technology for futures that's going to launch next year called Onyx. So I'm very excited about that. So MIAX has always been on the forefront in matching engine technology, and it's really on the foundation of risk controls and market maker protections.
So that's exciting, because I know that's a big part of why you joined. So best of luck as you continue on that journey to launch the Futures Exchange. And you also have been innovating quite a bit on the product side of the industry. So talk us through some of the MIAX products, the most innovative ones in the space.
So MIAX acquired the Minneapolis Grain Exchange 4 years ago, which is a regional agriculture exchange. We specialize in wheat futures and ag indices. So when we migrate into new technology, we're looking to innovate in new products. So we're looking to launch other agricultural products. So we're in the process of researching that. And then we also want to create other indexes on other asset classes, not just domestically in the United States, but we want to look globally and regionally in LATAM. So we're looking at fixed income, we're looking at FX, we're looking at other commodity products, but we see indexes as not only good future markets for institutional investors, but we also think that those are the right instruments for retail. Mm-hmm. They're cash settled. They're good benchmark products. They pair well with ETFs if you're trading ETFs in the equity space. And we think that's going to drive retail volume onto our exchange in futures.
Sounds fascinating. And I'm sure that doing more strategic partnerships in the space and looking to expand in key markets is still on the radar for MIAX?
Yeah. I mean, we're just getting started. I mean, our main focus was, build out the U.S. markets first, and now we're looking to expand globally and do that through strategic partnerships.
Well, it has a phenomenal foundation and technology and excellent industry veterans such as yourself. So take us, through some of your future predictions. What are you seeing 5 to 10 years from now in the derivatives industry and overall in the markets and from a risk management standpoint?
Well, I definitely think that options will continue to grow. I mean, in the US alone, we have 18 options exchanges now, and I think we're going to see more launch in the future. But we're also seeing a lot of markets around the world looking to launch options exchanges, including Mexico. We're also seeing the growth of single stock futures in a lot of markets, so I think we're going to continue to see a lot of those markets kind of be embraced as well. And I think we're going to start to see derivatives on other asset classes or emerging asset classes that we haven't even seen yet. 5 years ago, we probably wouldn't have thought that we would have futures on crypto. And now we have futures on crypto. In the US, we have a lot of sports betting that's happening. We're probably going to see derivatives on sports betting at some point. I think regulators are still determining how to regulate where the emerging products are coming in derivatives, but I think that a lot of institutions think that derivatives are a safer vehicle for introducing alternative products to the marketplace. So I think we're going to see a lot of interesting product innovation in the next 5 to 10 years. That's the product side. And so now you got to find a way to pair that with technology. So we're going to see more app development. I think we're going to see where AI goes in the next 5 to 10 years. Cloud is definitely going to continue to grow. I think what the next evolution of cloud is going to be is how do you get market data to be deterministic, meaning how is it predictable across the whole spectrum of the cloud. Right now, if you get market data in one location and another location, there's a lot of latency between that. So how can you get market data to be deterministic in multiple locations? We're probably at least 5 to 10 years away from getting to that point.
But that's a really hot topic that we were talking about earlier as well, right? It's all about the data in this industry. And so I'd like to see if there's any questions and maybe open it up from the audience.